Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap. And we've got stocks higher as we come back online after a holiday. And this as traders and investors view President Donald Trump's comments and first-day actions as a positive one, a bit softer than initially believed when it comes to some of the potentially more aggressive tone that has come through from the run-up to his inauguration. So looking at the benchmarks, the Dow Jones Industrial Average added 1.2%. That's around 538 points to 44,026. The S&P 500 gained 0.9% to close at 6,049. And we've got a Nasdaq Composite up 0.6% to 19,757. And to get more insights, we are joined by Chartered Market Technician Jay Woods. He is the Chief Global Strategist at Freedom Capital Markets. Jay, thanks for joining us on the show. How are you doing today?
Hey, great to be with you. I'm doing well. Great day in the markets. It's been exciting.
Exciting and busy. What have been your biggest takeaways from the market reaction to what has happened in the past 24 hours? Of course, Donald Trump right front and center.
Yeah, we're getting a little nervous, to be honest with you, before we headed into last week. And the market had corrected a little bit. The S&P 500 was down just over 5% from its peak in December. And now there's a little more optimism back. We got inflationary data that wasn't too bad last week. And now the big concern we had going into the inauguration yesterday was tariffs and what kind of impact drastic tariffs could have, especially when it came to global trade with China. And right out of the gates, the first 24 hours, he's focused a little on Mexico, a little on Canada, but nothing on China. And that got investors a little happy. And then the price of oil went down, which is also good because if the price of gas goes down at the pump, that is a major tax on Americans filling up their gas. So if we can save money at the pump and avoid some of these inflationary concerns because of tariffs, we're off to a good start. So far, so good, and we're within all-time highs now. So it's been a good start.
Yeah, markets are happy so far. TikTok users are happy so far. And it's not just the data, it's also the charts. Walk us through the momentum you're seeing right now.
Yeah, the momentum has been unbelievable. Like I said, we had a 5.5% correction in the S&P 500, and you usually get 3 corrections of 5% or more on average every year. What we haven't had is that 10% correction. We usually get one every year. We haven't had one since October 23rd, so there was a little anxiety. But what we just did recently, we are on the verge to new highs, and the market for technicians looking at moving averages, we are now above the 50-day moving average. That's very healthy. The breadth of the market has been expanding, meaning winners are exceeded by a great margin. So the S&P equal weighted index, which is, every component of the S&P 500 equally weighted, that is up 3%, while the stocks that, drive the market, the S&P 500, the Magnificent Seven, are only up 2%. So we're getting a broadening of that rally. So there's a lot more optimism than there was just a few weeks ago. So the technicals are looking good. We're getting momentum indicators looking for a positive upswing. And I think the way this is going with the positive momentum, as long as we don't talk about major tariffs, we're poised to make new highs with the financials of all sectors leading us right now.
All right, Jay, let's zoom into some of the sectors. And we've got, of course, energy also in focus as we saw Donald Trump declaring, quote unquote, a national energy emergency. So he wants to drill more. At the same time, he's pushing back against EVs, which is a bit of a head scratcher right now because he's best friends with Elon Musk.
Yeah, it is, but I think Elon Musk has bigger plans and a bigger vision, and what he has done by putting these, taking subsidies away from the EV companies is really crushed Tesla's competition, because Tesla's an established brand. It's one of the biggest brands here, where the other startup EV companies are still struggling. So over the long term, this will work out better for Musk. But from a short-term perspective, the drill, baby, drill, the energy companies, they rallied the first part of Trump's term in 2016, and then they faded off. And now it looks like that the energy could be under pressure again. They had a nice rally over the last few months. But for me, if we're going to continue to see the price of gas go lower and the oil reserves pick up, then the price should come down, and that won't be good for the bottom line of some of these energy companies. So it's interesting to watch. And then as far as EVs go, he got us out of the Green New Deal, so he is not a big fan of any of these subsidies. So when it comes to Elon Musk, we're going to focus on his technology. We're going to focus on his push to go to Mars and space and satellites. I think that's where Tesla and Elon Musk will make most of their money. And as far as the EVs go, it's secondary at this point.
Yeah, with more supply in the market, perhaps oil prices could come down. But what's not coming down is the price of Netflix in the US. Netflix is hiking the price of most of its plans. What do you make of it? Is there appetite for folks to absorb these higher costs?
Yeah, Netflix earnings just came out right before you jumped on the air. The stock's trading up 13% to all-time new highs. And a couple of reasons. This is the last time Netflix is going to tell us what their subscriber growth was, and it grew bigger than they expected. Live sports has been a big hit. That Tyson-Jake Paul fight blew away every record number there ever was. And then the National Football League, they had a Christmas Day game with the Kansas City Chiefs with Taylor Swift in the audience and Beyonce performing at halftime. So they had metrics on their NFL game that had 24 million viewers more than a regular NFL game. So with that, they've got eyeballs. Subscribers came in and they announced a price hike. People have different platforms, an ad spend or a non-ad spend, and I think that their viewers are, an extra $1 a month will not cost them much, and that's a great thing for Netflix as they continue to grow, as they get more advertisers, and the people that have been subscribing and loyal users for years will probably pay that extra $1. So they hit on all metrics, and the stock is rewarding investors after hours.
Yeah, it's an interesting move to move bigger into the sports space where perhaps you might hook in another member of the family and then it becomes a bit stickier in a sense.
Yeah, exactly. And the sports they're going into, they just signed a deal with Women's World Cup Soccer and then Raw, which is the WWE wrestling. So these are sports. I don't know, Ryan, what's your sport? What would you like to see them get into?
Yeah, more NBA perhaps. I wasn't a big fan of the Jake Paul and Tyson match, but I suppose it's a good first step.
Yeah, that got a lot of eyeballs. There was a lot of hype and not a lot of substance when it came to that fight. But Netflix is finding the right markets to go into, and maybe if you're lucky, Ryan, you'll get the NBA in the future. You never know.
All right, let's talk about some other stocks on your watch list. And you've got Procter Gamble. What are you looking out for here in particular?
Yeah, Procter Gamble is a very important stock. It's one of the biggest consumer staples here in the United States and globally. And what we want to see is a little bit of a rebound. It's been under pressure the last few weeks, down, I believe, 13% from its high. It doesn't really move dramatically, but when it moves, it goes directionally over a period of time. And it looks like it's starting to reverse. So we want to see if they say there are any headwinds from the strong dollar, if that's hurting their bottom line, hurting margins. So Procter & Gamble's one to watch because it's been beaten down, and if this rally does incorporate more stocks, we'd like to see Procter & Gamble be involved. The other one to watch is Johnson & Johnson in the healthcare sector, another space that's really been beaten down here lately. They've got a few drugs out there that we're waiting to hear how those have been doing with sales. So J&J, Procter & Gamble, both in the Dow Jones Industrial Average, both reporting tomorrow, should be on your radar to watch.
Yeah, lots of earnings to keep an eye on. And it's not just the earnings. We've got the World Economic Forum playing out in Davos. What's going to be on your radar on that front?
Yeah, that's like the inauguration here yesterday is people watch. You're going to watch, like yesterday at the inauguration, you watched Zuckerberg and all those titans in technology, who was talking to whom, who was closest to the president. Well, in Davos, you want to look at a lot of the big bankers. Financials, we're talking a lot about M&A activity. So you want to see who Jamie Dimon is cozying up with, who is socializing with whom. A lot of deals get done there. Yes, they focus on, the environment and doing all these great things, and there may be a lot of talk about what Trump just did, getting us out of the Green New Deal. But I think the bottom line for investors looking for opportunities is to see who's cozying cozying up with whom at Davos. So you see, if you get pictures of the paparazzi taking pictures at parties, you want to look at what CEOs cozying up to another one, because maybe, just maybe, they're talking about a big deal coming up in the future.
Yeah, lots of memes coming out from the inauguration around some of these tech leaders. We'll see if we get some on that front from Davos. All right, thank you so much. We've been in conversation with chartered market technician Jay Woods. He is the Chief Global Strategist at Freedom Capital Markets. Jay, thank you so much for your time this morning.
Thank you.
All right, we'll catch up with you again soon, Jay. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.